Thank you, Chairman Pomeroy and members of the committee. My remarks today will draw on two recent reports on research done by the National Academy of Social Insurance. The first is about a public opinion poll that we did on Americans' attitudes towards Social Security. And another is the report we call Fixing Social Security. It includes both policy options and cost estimates for over 30 ways to improve the financial status of Social Security in the future, and about a dozen ways to improve the adequacy of benefits of the program. I would like to make 6 key points today very quickly. First, Social Security is affordable out in the future. As we saw in the opening slide from Chairman Pomeroy, when you look at it as a share of the entire economy, which is the appropriate way to look at affordability, it's almost a flat line. It's between 5 and 6% of GDP for the next 75 years. Second, benefits are critically important to elders, to children, and to virtually all Americans who rely on income from work, which is virtually all of us. Children in particular have a big stake in Social Security. It lifts 1.3 million children out of poverty. It alleviates poverty of another 1.5 million children. And quite frankly, it is the major source of life insurance for children against the loss of a parent's income because of death. Third, Americans, based on our survey and other surveys that other organizations have done, Americans value Social Security, they want to improve it, and they're willing to pay for it. Our poll found in particular that people say they don't mind paying Social Security taxes because they value it for themselves, they value it for the support it gives to their aging relatives, and they value it because of the support and stability it gives to millions of other people in the United States. These findings were true vast majorities for Republicans, for Democrats, and for independents. I mean, the data show that this is a program that is supported across the board. Fourth, there are many good options for improving the adequacy of benefits where the needs are greatest. There are many targeted options. We discuss many of them in our report. They include low-paid workers, widowed spouses from low-income couples where the couple depended on income of both the husband and wife to make ends meet, and children of deceased workers who in the past were able to get support through college if they had lost parental support. That support is no longer there, and it deserves a new look as we look at the needs for education for our young people in today's competitive economy. My fifth point, history offers good ways to fix Social Security's long-term shortfall. Through most of its 75-year history, Social Security has had a FICA rate increase scheduled somewhere out in the future, but that ended in 1990. We face a shortfall in Social Security about 25 years from now for a particular reason, and that is because we don't yet have a 75-year revenue plan that matches the projections that includes the baby boom retiring and all of us living a little longer. That is, that we have the benefit projection, we don't have the revenue plan to match it. Congress could develop such a revenue plan and adopt it in the next year or so. And in my prepared remarks, I suggest a couple of ways, various ways to do that. A couple of options would broaden the tax base for the Social Security or FICA tax to restore congressional intent from the past. One such change would gradually restore the cap to cover 90% of wages. That's where Congress aimed to get it when they last adjusted that cap in 1977. Another adjustment would be to extend the decision Congress made in 1983 to include 401k contributions as part of the Social Security FICA base. They did that because they didn't want to erode the base for Social Security and Medicare through these voluntary employee contributions. Similar treatment for other kind of employee cash set-asides could help strengthen the finances of both Social Security and Medicare. Finally, if we're looking at a 75-year horizon, it's worth thinking about increasing the FICA rate somewhere out in the future when the money is needed. It doesn't need to be increased now. We don't need the money now, but one could act now to schedule it 12, 20, 40 years from now so that the system stays in balance. My final point is that timely solutions can be enacted now. If we adopted targeted ways to improve benefits and a 75-year financing plan, the next Social Security forecast would show the system is in balance. Americans would be ensured that they can count on the benefits for the next 75 years as we have for the past 70. And we would have done what the American people say they want. In this case, good policy could also be good politics. Thank you, and I'll be happy to answer any questions.